So, you've got this incredible dream, right? Spending your retirement years somewhere amazing, like a beach in Thailand, or maybe a beautiful villa in Spain. It's a fantastic vision, but there's this one little financial detail that can turn the whole thing into a nightmare if you're not paying attention. We're talking about long-term care insurance and how to make absolutely sure it's your global passport, not a locked gate.
I mean, it's such a powerful dream, isn't it? The thought of leaving it all behind for a new adventure in our golden years. And let's be honest, often in a place where our retirement dollars just go a lot further.
You can picture it, right? The culture in Spain, the incredible nature of Costa Rica, the vibrant energy of Thailand. Picking the destination? That's the fun part. The tricky part is this one crucial financial question that honestly most people just don't even think to ask until it's way too late.
And that leads us right into this major roadblock. It's a hidden hurdle with the very insurance you bought to protect yourself. And the whole problem kicks off with a really common and, frankly, pretty dangerous assumption.
And there it is. That's the assumption that gets so many people into trouble. You pay your premiums for years, maybe even decades, thinking you've bought yourself some real peace of mind. But then you move abroad and find out your safety net has a massive, gaping hole in it. And the culprit? Well, it's usually one very specific kind of policy.
It's called a reimbursement-based policy. And you should just think of it like filing an expense report at work. You have to spend your own money first on services the insurance company approves of. Then you have to collect all the perfect paperwork, submit it all, and then just cross your fingers and hope they pay you back. You can probably imagine how messy that gets when you're not in the US. This is exactly where that beautiful retirement dream just slams into a wall of red tape. I mean, think about it. The care provider you find in your new country, they're probably not going to have the specific US licensing your policy demands. Their billing system is totally different. Every single document has to be translated, and some policies even have this little gotcha clause that says you have to be physically in the US to get your money. It's an absolute bureaucratic nightmare.
So what this all boils down to is that there are two totally different ways these policies can pay you. And listen, this isn't some small detail in the fine print. This is the whole ballgame if you're planning to live abroad. The difference is truly night and day. And here it is in a nutshell. That reimbursement policy, that's the messy, complicated expense report. But an indemnity policy, that's like getting a paycheck. As soon as a doctor certifies that you need care, a cash benefit is paid directly to you. No receipts, no approvals, no hoops to jump through. It's just the money you need to manage your own care, no matter where on earth you happen to be. This cash benefit approach, which you often find in more modern hybrid policies, is the absolute key that unlocks true global freedom for your retirement. It's literally designed for portability and predictability, which are the two things you need most when you're living overseas. And here's the magic number you need to remember: 100%. That's right. With the right kind of hybrid indemnity policy, you get access to your entire benefit pool internationally. There's no geographic penalty, no reduction in your benefits just because you decided to retire in Costa Rica instead of, say, Cleveland.
And the process itself is just refreshingly simple. First, a US licensed healthcare practitioner certifies that you have a chronic illness. Step 2, you start getting your monthly cash benefit deposited right into your account. And step 3, you keep getting those benefits anywhere in the world as long as you provide an updated certification every so often. No receipts, no invoices, zero hassle.
Okay, and check this out. Here's an incredible bonus. Since your policy is paying you a set cash amount and the cost of care is often way lower in other countries, your benefits can actually stretch further. That cash might cover a much higher level of care abroad than it ever could back in the US. It effectively extends the life of your policy.
All right, so how do you make sure you get the right coverage? Well, it all comes down to asking the right questions. So let's go through your essential checklist, the one you need to take to any financial advisor or insurance broker you talk to.
These are your 4 non-negotiables. You have to ask, point blank, can I use this anywhere without restriction? Will I get 100% of my benefits internationally? Do the cash payments follow me outside the US? And finally, do I have to come back to the US to keep getting paid? Look, if the answer to any of these isn't a clear, confident yes, then it is the wrong policy for your global retirement dreams, period.
Now, finding one of these policies isn't always super straightforward. And that's why it is so important to work with an independent expert, someone who isn't just tied to one company. You want an advisor who can shop the entire market for you, sometimes looking at over 100 different carriers,
to find the policy that truly gives you that indemnity flexibility and full international access. It's all about finding the absolute best fit for you, not what's best for the insurance company.
So, as we wrap things up here, this is really the last big question to ask yourself. You plan your finances, your savings, your Social Security, but is your long-term care plan actually built to travel with you? Making sure the answer is yes might just be the single most important step you take to make that global retirement dream a secure and lasting reality.